Stocks that were in focus today was Syndicate Bank, which came out with its fourth quarter earnings numbers, and the management in fact now joins us. Let's go across to Lata, who will take us through that conversation. Hi Lata.
Thanks a lot for that, Ilan. The numbers did show that profits were lower and the net interest income grew marginally, but there seems to have been an improvement in the asset quality. Gross NPLs have risen by barely 5%, and as a percentage of the total book, the gross NPLs have fallen from 2.8 to 2.6, which is always a good sign. So let's welcome Mr. Jain, who is the Chairman and Managing Director of Syndicate Bank. Mr. Jain, let me start from the asset quality because that is what the market is talking about more. Can you tell us exactly what were the fresh slippages in your asset book and what were the fresh amount of restructured assets in the fourth quarter?
Yeah, as far as the fresh slippage is concerned, during the fourth quarter, it is slippage is to the tune of 1,197 crores.
Okay.
However, in this amount, there are some 2-3 accounts are there which are under referred to CDR, and one account is likely to be upgraded, and these 3 accounts put together amounting to 400 crores.
Okay.
So, if I exclude those accounts which are temporary phenomena, the slippage is to the tune of around 800 crores.
Fair enough.
Now, if I see the trend, in the first quarter, the slippage was 1,200 crores. It increased to 1,700 crores in the second quarter. But again, in the third quarter, we could able to manage the slippage, and they were reduced drastically to 590 crores. Now, again, bearing that 400 crores, it is in the range of 800 crores. Otherwise, total 1,100.
Okay.
But going forward, we feel that NPAs are slightly bottom out, and probably the slippage will not be as high as the last year. And we foresee that they will be in the range of 400 to 500 crores per quarter going forward.
Fair enough. What about the recoveries? You did a fairly good job in previous quarters as well. Is your full year recovery 805 crores?
Yeah.
Okay. And how much of it was
full year recovery is...
yes?
No, full year recovery has been 1,800 crores including interest income, but 805 crores is yes towards principal. You are right.
Okay.
805 crores full year recovery is towards principal, and for the quarter the recovery has been 243 crores.
Okay. You expect aggressive recovery going forward as well?
Yeah, we expect, see what, in the case of Syndicate Bank, I'll give you an analysis. Basically, if we analyze our size-wise NPAs, our NPA up to 25 crores is almost 70%. So I feel there is a huge potential to recover in those smaller accounts. And we have put a special team on job. A special DGM has been put to take care of all the surface action, as well as some 4 or 5 chief managers have been identified who are given individual account-wise responsibility of about 25 lakhs account. Plus they are monitoring some 2 regions as well. So this year going forward, I am quite hopeful that there will be very aggressive recovery, and probably I am sure that I will be able to bring down the gross NPA around 2%.
You are saying that 70% of this your NPA book is accounted for by small loans under 25 crore.
Yes.
Yeah. All right. What can you give us an idea about the restructured assets as well? How much in the fourth quarter? What is the total book?
Fourth quarter mein total restructuring was around 1,090 crores, and my total restructuring portfolio is 11,000 odd crores. Okay.
You expect that to continue in this quarter? I mean, half the current quarter is over. What is the pipeline looking like?
Pipeline is not very big. I think going forward, I will not say there will not be any restructuring, but all big accounts have already been addressed. My gut feeling is that going forward, the restructuring will be in the smaller accounts, and maybe it will be ranging in the range of 300 to 400 crores per quarter, not more than that.
Okay. Can you give me an idea of your margins now that we have finished with asset quality? What would your margins look like in the current year? You have improved from 2.76 to 2.79 in the fourth quarter?
Yeah.
So how does it look like going forward?
As far as the margins, what I expect is that going forward, we'll be able to maybe reach somewhere around 2.9 to 3% NIM global level.
Okay, fine. What
because
about
this year?
Yeah,
because,
please go ahead.
Yeah. This year, as I told, that we are seeing that the NPA increase will not be much, and there will be aggressive recovery as well. And also, once the business figure increases, definitely I am quite hopeful that NIM will get improved to around 2.9 to 3%.
You expect the loan growth to be better in FY15 at all? What was the FY14 total advances growth, and how much do you think you will do in FY15?
See, advances growth in FY14 was 18% on global level, and it was 16% on domestic level. Going forward, it all depends, how the new governments get formed.
Yes.
Because it will have a major impact on the government which is going to be formed. If some strong government come with full majority, I think things will be quite positive on the grounds, and probably the sentiments will be positive, and with that my gut feeling is that there will be definitely better growth of advances going forward.
Okay. Finally, how are you placed on capital? What is your overall capital adequacy? Tier 1, Tier 2?
My overall capital adequacy is 12.01, and within that my Tier 1 is 8.89 exactly. I'll give you the figure.
Okay.
It is 8.89.
All right. So this year, if you show some aggressive growth in loans, you will need a little more capital.
Yeah, in fact, I am already having a government approval for QIP of 200 crores. Plus, we have already made a request to Government of India that to maintain 12% capital adequacy going forward and to support the business growth, we will be requiring some 800 crores of capital. So we have made a request.
Okay.
We need to see the response of the government.
Fair enough.
But as far as capital is concerned, I don't think there will be an issue because there is a lot of headroom available in Tier 2.
Okay.
Tier 1 is already strong, which can take care of the growth for at least 1 or 2 years. And headroom is available in Tier 2. So we can raise the Tier 2 also, Basel III compliant bond, and take care of the capital adequacy and try to maintain it to 12%.
You have allowed your NPA coverage to slip from 83 to 70%.
Yeah, no, it has slipped. This is basic reason is this year, if you see, there was a steep increase in the gross NPA figures.
Fair enough.
From almost 50% increase.
Yeah.
So to maintain that ratio, we will take some time.
Certainly.
But we are quite confident going forward. We will try to slowly build the NPA provisioning coverage ratio.
Okay.
And our internal target is that at least we should build up to at least 70 to 73% by end of this year. Okay. And within 1 or 2 years, we will be again reaching 84%.
All right, Mr. Jain. Pleasure speaking with you. Thank you very much for sparing time for us. Okay, so that's the word from Syndicate Bank. Elan, the gross NPL as a percentage has fallen, but more important, the chairman is confident that the current and future quarters are going to see a receding burden of incremental NPLs.